Dow Jones down 1,000 points. If you're reading this or watching this, it's probably too late to take this trade. Just like with anything else that you read in the news, guys, by the time the news hits the headlines and you're reading it, it's too late to act on this information because the market reaction has already taken place to an event. And so clearly, if you watched the last video or the last few videos, we have pointed this drop way before it happened. And in this video, I'm going to break down the analysis. I have a lot of viewers that are watching but are not taking action. A lot of viewers that would like to make some of the crazy money that will show you is possible with trading weekly options, but they're not getting the traction. I'm going to dive into the analysis, how you could have acted on the information in the prior few videos, step by step, trade by trade. So I hope to make this educational. I'm going to show you some charts before, some charts after, and I'm also going to address some psychological aspects going through this. So again, the main point I was trying to make in the last video, okay, is hedge funds are about to lose billions in a fashion that you've never seen before, and that's exactly what's already taken place this week. The last video that was titled Hedge Funds to Lose Billions and How You Can Profit From It was posted about 6 days ago before any of the stuff this week has taken place. And so if you're paying close attention, maybe you wanted to do something with this information, but you didn't know how. So I'm going to show you what you could have done. The idea of the video was to say that, look, hedge funds pile up in the same type of stocks. Like some of these stocks like Google and Amazon, right? They're 100% owned by institutions. And basically, there are times in the market where institutions, they sell at the same time. And it's highly puzzling because, you know, there's very rich, prominent figures that time circumstances like this, and they make billions on the drop. An average retail trader, all you want to do is just, oh, let me buy the dip and see if stuff drops, without really realizing that the biggest money in the history of the financial markets has always been done in a drop, because you can use stuff like options, and because things drop much faster than they climb, you can accumulate crazy positions within a short amount of time and profit substantially utilizing short-term options. So basically the point I was trying to make, an average millennial, guys, you're not focusing on the right stuff right now. It is not the time to buy the dip. It is time to short the bounces, because we've been officially in the bear market. And clearly you would be confused if you were listening to the news, because they're still saying how there's no recession. We've been in a fucking recession. They're still talking about how the market is not dropping. And clearly that's not what's happening. So this was an example of how more of this was going to happen going into this week. So Netflix was just a prime example of some huge losses by hedge funds. And these funds, nothing necessarily crazy has to happen. It's just understand the fact that all of them are exiting the stocks that they've been buying and buying and buying and buying and buying and buying and buying for a long, long time. And now they're exiting at the same time. And some of the best companies are going to create some of the biggest losses in the financial industry. And so the market psychological manipulation, guys, we've talked about it, okay? You can't be brainwashed by the news and these bounces, because if you're going to react to these bounces, okay, you're going to exit at the wrong time. You're going to do some really wild, silly mistakes that you could easily avoid if you understand the charts. So the big money is going to be made on the drop. And some of the charts that we've pointed out on Netflix, for example, was these gap downs. Notice typically, okay, we'll get a gap down, they'll buy the dip, but don't be buying the dips right now, because the chances of a further drop is substantial. So target the bounces, okay? So your goal, again, is to get in before this happens, right? And don't be the victim of buying the bounce here, even though for a day or two it may seem like a good idea. Just understand, overall, the market is a severe downtrend, and we're just breaking key levels, which spells some crazy stuff for the market going to the next few weeks. But more details on that in just a little bit. So the charts that were presented in the last video, I'm going to just briefly go through before and after. So that was the Google chart, the Amazon chart. All of these are before pictures, Microsoft, Tesla, and basically looking at the longer time frame chart, I've pointed out that Amazon was in a major formation before a huge drop. And so this was the picture of Amazon before the drop. as I was discussing the slide in that video, I pointed out that Amazon wasn't in a rush to do the stock split, but it was a little bit too late. And what really Amazon was trying to avoid by doing the stock split was trying to avoid headlines like today. Headlines where Amazon drops over $400 in its share price in just one day. So if you listen carefully to this information, you would have been able to profit from this further drop in Amazon. So that was 5 days ago, 6 days ago when I recorded the video and posted this, explaining you the top information. You can see huge drop, the biggest drop since 2008 in the shares of Amazon. It's all over the headlines today. Amazon, Google just closed out their worst months on Wall Street since 2008. Amazon down 23%, Google down 18%. And most of the Amazon drop came today. So here's the analysis. So let's say you watched that last video where we predicted all of this stuff happening. The question is, what did you do? How did you do it? Because there is an overwhelming amount of situations where you could understand the information, but depending on what kind of action you take on it is going to determine whether you make the money or not. One of the main points of the last video was, look, you may get the market direction right, but how do you trade it? How do you actually trade it? So the way we actually traded Amazon, we waited all the way till the last 30 minutes before the earnings announcement, okay? And this is where I send out in the alert group the messages to short Amazon. Amazon puts, you see, this was April 28th, okay? This was April 28th right here. At the final few minutes of the day when Amazon actually spiked just above the $2,900, so $2,910 was my entry, $2,913 was my entry with some of the students that work with me one-on-one. Amazon, again, I send the alert right here specifying the strikes, $2,900, $2,820, $2,770. Now, all these guys, depending on the strike, made $2,820. We're buying those for about $50. 2770 were a lot less. Depending on which strike you had, you're easily opened up the next morning about anywhere from 5x to 10x, and depending on exactly where you exited. Now, throughout the day, we actually did short the bounces on Amazon, such as the one here, such as the one right here, and those puts with lower strikes during the day actually produce some phenomenal returns as well. So this is exactly how maybe you've listened to the information in the last video. You're like, hey, but you know, what exactly do I do? What strike do I buy? When do I actually enter the trade? If those some of the questions that you had on your mind, maybe you even bought an Amazon. Maybe you bought it over here, or maybe you bought it over here. You know, it's just timing is everything. Timing is what is going to determine whether you're going to be able to reach this 5, 10x, 20x sort of returns. And so if your timing is wrong, if you're getting too much ahead of time, you're paying a lot more for the cost of your option position, and therefore you may still make some money. I mean, it's difficult not to make money on this drop, right? All you had to do was take action on the information presented in the last video. But so some of you that missed this, make sure you don't miss out the trades next week, guys, because actually this wasn't even the best trade this week. So Amazon alerts, you could have just became a part of the alert group. Now, we don't allow everyone in it. You do need to understand 13 market moves and charts divergences before we'd allow you in the group. So here is basically how Amazon looks on the daily chart, and understand that our entry actually coincides right here on the short side, meaning we were betting that Amazon was going to drop. And so again, for those of you, it's amazing. I've taken some emails and conversations with a few guys, like they don't even understand that the money can be made when stocks drop. Like I was just shocked. So I'm just trying to make sure that if somebody's new, like guys, understand this. When stocks drop, you make money, okay, by placing put option bets. They're very simple. You know, very simple. Anybody can do it. Like if you understand where the stock is moving, okay, you can place this directional bet. There's no crazy Greeks that you need to know. You really need to understand the timing of the of your trade, the timing, the entry and the exit. And so in order to accomplish that, you really got to understand the charts. So opposed to shorting it here or here, which guys, I made mistake at times, but if I didn't have this much experience looking at charts and understanding what I'm actually looking at, there's no way I'd be able to nail some of these phenomenal entries. And again, I don't nail an entry every time, okay? But there's a great chance if you trade with me, you've came across some of these killer entries that allowed your account to grow exponentially higher. So this is how it looks on the daily chart. Again, Amazon before the drop, this was our entry. Our exits were here, our ads on the bounces and so on, as I've shown you only daily charts. Now notice in the last video I've pointed out that I wouldn't want to actually short Facebook, because I said, look, when you look at the chart, even a 5-year-old can look at this and say that this is dropping. And so oftentimes when this is the case, well, it's too late to short. And so if you watch that video, right, and if you were trading with me, we did partake in just a quick daily trade on Facebook puts, but we actually didn't participate in puts going into the earnings. So you might have said to yourself, well, hey, Facebook, oh, look, everything's dropping, Google is dropping. I'm just going to go ahead and buy Facebook puts. And this is where you would have gotten screwed, because Facebook actually went higher this week. And despite of the market sort of doing a mini crash already today, or what I would call pre-crash type of event, okay, it didn't do much, right? It didn't really drop. It dropped a little bit, but you would have not made any money on shorting Facebook, basically, is the point. And if you listened to the last video, you would have known that, hey, Leo is not shorting Facebook going in because of this chart, okay? It's just there's not much meat left on the bone here when you see a chart like this. All right, moving on into our comparisons before and after. I pointed out that Google, just like Amazon, was forming a major top formation based on this chart. Guys, if you don't understand how to read this top informations, the charts divergence course would really help you out. Okay, if you want to really nail some killer trades in the market, you have to understand these things. Okay, so this was before, okay, this is after. And to some of you that are new, you're like, okay, we dropped a little bit. Guys, it dropped a little bit as far as the stock itself. Okay, dropped a couple of 100 points. But in terms of options, I mean, these are colossal gains. Okay, these are 5x, 10x sort of trades that all you had to do was watch the last few videos. You would have understood it. All you had to do was take our charts divergence course, and you would have known how to do this on your own. And sometimes, guys, it's really good to trade with somebody who's got a handle on the market. Trade with a 13 Market Moves coach who trades daily, who watches the markets daily, who understands, what could be some of your better entries. And again, I'm not perfect. I do make mistakes at times. I'll give you some examples in a few minutes. But overall, okay, I have a ton of traders that made money this week that are super green in their accounts. And I've got a few casualties, maybe about four or five guys that didn't do well. And so it all boils down to entries and exits. Some of them missed some entries, some of them missed some exits. There's one particular guy that I ended up doing a bad entry, and as a result, it was just, we ended up holding on to the trade that just didn't quite hit the strike price. So there's going to be some mistakes along the way, but for the majority of the part, if you focus on the charts and you've got your entries down pat, guys, you will do exceptionally well by just simple understanding of what this chart actually communicates to you. So Tesla, major top information, okay, this was before, and clearly Tesla's been doing nothing but a series of drops throughout the week. And somebody sent me the message this morning. He's like, whoa, Leo, there's no way I'm shorting Tesla this morning. And I asked them why, and they said, well, it's because of the news. Didn't you hear Elon Musk is done selling Tesla shares? And I'm like, well, great. Use this bounce as an opportunity to short. Okay, trust me, Elon is not the only one that wants to sell the shares, and clearly he may have a reason. Okay, but why would he be doing a Twitter acquisition now? He could have done it before. And the reason that he's doing Twitter acquisition right now, because he knows, okay, Tesla stock is going to drop. That's why he's so pissed off at Bill Gates. I've covered that in the last video. And so any bounce in Tesla shares is a perfect shorting opportunity. All right, so this is after, and so when we're talking about Tesla, we're still in this black candle. Guys, if you know what black candles are from the charts divergence course, you could have taken this trade on your own. I mean, this is easy, right? This is a 300-point drop from 1,070 to 870. And guys, never mind, the lows of the week were at 820. Our target was 780, and we started buying Tesla puts when it was still right around 1,000 level. So we've caught a 180 point drop, which was magnificent. I'll show you exactly how we traded it. So in the alert group, after I presented that video, the next morning, we've actually sent out the alert. It's one of the first alerts I did. So April 25th, when was it? It was a Monday right here. So Tesla is not dropping, right? But again, just like you don't want to be the guy reading the next day, oh, Tesla is dropping. Again, it's too late, all right? What you want to be doing is you want to position yourself ahead of a major move. And this move was lightning fast. Look, so Monday, you're getting in. We send you the message, add. Tesla puts 900 strike. Now notice when we're doing this, Tesla was trading above 1,000. See, right here, we're sending you messages. 990, 1,000, 1,005, okay? We're sending you messages, short Tesla, okay? Initially, we suggested buying 950 strike, 900 puts, and then the more I started looking at charts that day, I'm like, listen, I mean, there's going to be a sharp, big sell-off today or tomorrow. So I've said that on Monday. I've said that on Monday, and so if you're an unexperienced, brand new trader, you might have gotten into the trade, and guess what? Well, it jumped lower, it bounced higher, and you would have been like, well, I'm done for the day, I'm out. I lost money on this trade, right? Well, guys, understand, the only reason you would do something like that if you're totally unfamiliar with 13 market moves methodology. You know, if you're clueless exactly how to babysit your trade, if you're clueless that, hey, some of the biggest gains are made within 72 hours. If you capture a 72-hour move, which would clearly, if your entry is here and your exit is here, all right, boom, you just nailed a humongous move. In terms of options, it pays you colossal amount of money. Just colossal amount of money, guys. I had people that went up instantly, 13x, 15x, 20x. For those of the guys that actually had the balls to stick with the trade. Now, most of the guys, I'll be honest with you, I'm shocked how many of you are just scared to death, okay? Your emotions are all over the place. I mean, you're complaining about your wife being emotionally unstable, but shit, look at yourself. Fuck. I mean, you react to every little fucking bounce, okay? So, before you're going to go talk shit about your wife and say, well, she's the reason why, I can't focus on trading, okay? Like, look at yourself, okay? Grab your balls and, be the man to stick with the actual trade, because that's the hardest thing to do. Taking the trade is easy. Jumping out of the trade is easy. The hardest fucking thing is actually staying with the trade. Staying with the trade when it bounces. Staying with the trade when the market is playing tricks with your mind, telling you that, no, you're wrong. Tesla's going higher. What are you doing shorting it, right? Like, these are the sort of things that will cause you to get out of a really, really highly profitable trade. That's not the only time we'll actually trade a Tesla. So as you can see on Wednesday, again, actually, this wasn't Wednesday, Tuesday. This is April 26th. Send messages in the morning. Like, look, this is 3 minutes before market open. Right, 6:27 would be 9:27 Eastern time. So this was right here, 9:27 before the market opens. I send you another message in the alert group to short. So this was the absolute perfect time to short, right? Because if you've gotten in the trade Monday, some of your options would have decayed. But overall, I gave you another chance to get into the trade at the absolute perfect time. So this time, your options they appreciated in value drastically. Okay, and so we've pointed out, as you can see, if you follow all the alerts, that hey, the bounce shorted. We had another beautiful setup like this. Okay, and we're likely to get another one next week at some point. And today, when all the good news was hitting, right? Oh, Ellen is done selling. So this was your best entry. So as the stock was moving higher, there it is. This was your best entry. And I've sent out messages this morning saying, hey, Tesla shoots above 900, you short it. You don't think twice about it. It ends at one point at about 870, $1. I mean, this was a really nice trade. Depending on where you entered and exit, this was a nice trade. But guys, not as good as some of the other trades, like for example, as FFIV trade, right? Some of the trades that I didn't talk about in the video is I gave you an invitation to sign up for the alerts, to sign up for, you know, our earnings trading and so on. So this alert right here, guys, look, April 26th. Okay, this was Tuesday. Tuesday was April 26th. The trade right here with some of the guys that were trading with me, we took the trade right here. Later in the day, I sent the alert for the group to take the trade right here. Guys, I mean, this is a 35-point drop. The options were cheap. I mean, this trade, in a way, depending on the strike, was actually making more money than Tesla at some point. Now, some of the other trades, right? ALGN. And this is actually the advantage of working with a 13 market moves coach, because I honestly thought I sent this message to the group, but apparently somebody reached out to me and said, hey, what are you doing congratulating everybody on this trade in the group? You didn't send the alert. And I was sure I did, but I didn't send it to the group, but I did send it to a lot of guys that I trade with individually. So like for example, this person right here went from 2K to 23K this week. And so I suggested him buying one ALGN put for $1,300, okay? And so he bought the LGN put. Now notice it was 9 minutes before the market closed, so he was able to get in right here. And I mean, the next morning, I mean, just on one, guys, this is how good this example is, just for those of you that are not dealing with 50 or 100 contracts like some of our guys do. Like, this is just one contract. Just on one contract, you would have made $5,400 right here. All right. So a couple of the trades, I mean, as you can see, not all of them are profitable. And DWAC was profitable by the end of the week after the spike yesterday. But bottom line is, I mean, he went from 2K here, as you can see, there's his account at 2,300. The next morning, he was at 12,000. Some of the other trades also sent the alert on Domino's. And this was early in the day. He actually made more money in it as Domino's kept dropping. Domino's hit 335. So between these trades, right, just one contract. Look, you got Domino's, one contract, ALGN, one contract. You've got Tesla, a few contracts. Boom, between this, you go from 2K account to 12K account. And I think this particular trader ended up with about 25K. I think right around 23K for the week. So S&P 500, while most of the analysts are highly bullish, I actually pointed out there was a good thing, that there's still some actually highly intelligent people like this guy, JP Morgan, that thought that from here we were going to get a really nice bullish rally. And I pointed out that this was not the case based off the chart. And the most important chart in the last video, guys, I've shown you was the chart of Google. Let me see this chart. Basically, Google broke this major support at 2,500. And at that point, it was the only stock to do that. And when I was recording the last video, I said, look, this is the most important chart, because this actually speaks to you what the other stocks would be making, the kind of moves they could be making, and overall what type of move the market could be making. So basically, if you understood my main point in the last video here, you would understood that the next move, right, this is before and after, right? So this was before, while all the Wall Street analysts, they were bullish, and we were saying, hell no, based on the charts, based on the most important chart, Google, right, we were right here. And so we end up, 170 points lower. And you may be thinking, okay, well, what's the big deal? I'm going to show you what's the big deal. I'm going to show you how we actually traded that. And this is a snapshot from today. So this morning, before the market even opens, I send the message at 9:22 a.m. to the trading group. I basically say, look, we're looking at possible revisit. And now this is when the market is actually going higher. So it's easy to say these things when the market is dropping, but try actually understanding this very well in your mind as a trader that this bounce, right, was a best shorting opportunity of the week. It was the best shorting opportunity of today. And I send this message specifically when we bounce. When we bounce, I send this message saying short S&P 4260. So for those of you, you may be looking at different things, you got to punch in /ES as a S&P futures. That's what we follow when we trade, and that's what we actually trade. We trade this and we trade SPY. SPY in certain instances is going to be highly advantageous because these options right here on the futures, they expire at 4 p.m. SPY actually catches you an extra 15 minutes. But depending on what the market is doing, you want to trade futures. And guys, by the way, if you're interested in signing up with us, make sure you approve your account for trading futures. We will actually trade options on futures with you. I'll try to post a video over the weekend explaining how actually simple it is. Now, you can do magic with trading futures going into the next few weeks because the biggest moves in the market are going to happen overnight. And in order to capture them, you got to be able to trade futures. So wherever your account is, approve it for trading futures. If you're on Webull, close that account, open another one. Webull is the worst. I mean, if you're on Robinhood, please have some respect for yourself. Open a decent account for trading, at least a TD, Ameritrade, Thinkorswim. Do something. You can't be trading with these goofy other accounts, guys, that don't allow you to buy same-day expiration, that hold your money till the next day before you can take the next trade. Like, you cannot trade with accounts like this in this sort of market environment. Okay, so let me get back to the S&P trade today. So today, basically, we shorted S&P 4260 level that proved to be a top within 2 points of the top. And as the stuff bounced, look, I've sent messages again and again to basically short all the bounces. I've said that message before the market opened where our target was. We actually ended up we actually dipped under that target briefly right here to 41.18, and we finished exactly on target. Now, you may be thinking like, come on, dude, that's unreal. How would you have known at 9:22 a.m. that ES retest of 41.50, 41.37 would have been real? Well, guys, if you're a member of the group, you would have known this shit is real. Now, I ain't gonna lie and say I nailed the top within 2 points every freaking day. Absolutely not. But if you watch the market and if you understand the moves and if you focus, okay, you will get to a point to where you will be able to do this. And when you do this, this is when you are going to be able to produce results in your trading account. So we shorted the ES 4260. Later in the day, I've actually reiterated the fact that, it was a solid move. It was a look how, like, bounce, drop, bounce, drop. But what happens when market bounces, everything inside of you screams, I want out. Oh my God, we're going higher. And then drops. And you're like, well, certainly we can't drop any lower. And then it bounces. And you're like, oh my God, I got to sell these puts. And so, as you can see throughout the day, I keep sending this message. I'm like, short all the bounces. Damn it, stay with the trade. Short all the bounces. So, short all the bounces. This was a message right here when we're bounces to 4,200, because a lot of times, right, the market will dip under a key level like 4,200. It'll bounce out, and naturally, on a Friday, you could get like a nice move 4 as a result, which will resolve to the upside. Well, I've sent you a message today, and the alert's basically saying that, look, short the bounces. The resolve today is to the downside in the close. The resolve meaning the market will resolve in a drop. It will result in a drop much lower than where we are. And that message was sent right here when the market actually bounced, which was the least likeliest time for anyone to be sending that message unless you really understand the market structure. So the next comment I've sent was saying that at 2:15, all right, which was in about 45 minutes, okay, people, I said people that were buying the dip in the market. I told you in the last video, don't buy the dip. So people that were buying the dip yesterday and people that were buying the dip today, all right, so maybe you saw the market rocketing higher this morning and you bought the calls. You're like, oh yeah, we're going higher. All the analysts are right. Yeah, they do know what they're talking about in the news. And basically you would have gotten into calls and they would have dropped. You're like, oh, holy shit. Oh, most of you would have gotten out of the trade like way earlier here or here. But if you held, you're like, okay, we're finally bouncing, and then drops again. You're like, I can't take it anymore. But bottom line, after all these drops and key stocks like Amazon unable to bounce, Apple unable to bounce, okay, you've got, you know, major stocks unable to bounce, okay. Right around this time, 2:15, you could get margin calls on those positions, okay. And at that point, you can really have a really nice final move in the day. And so I've pointed that out, that people that were buying the dip yesterday and today are about to dump everything. We could see an easy 46-point drop in the next 45 minutes. And basically, that's exactly what happened. Now, I was a little conservative on the drop, but none the case, we hit the target right on the money. So the idea was to stay with this, right? The idea was, basically I said, while they're dumping, we will be closing our puts at best prices for the day. Best prices for the day. So you may be wondering, if you're new, or maybe if you've been trading for years, well, what the hell does this mean in terms of money? How much could I have made? So what you could have done with this alert, guys, here's a student that goes from 2,000 to 58,000. You can be like, fuck, this is impossible. Guys, when you understand the market structure, when you understand the 13 market moves, this is possible. So this particular trader was trading S&P 500 futures with me today. As you can see, he made $51,000 on certain strikes that he cashed out. He still got a position going on Monday, making $11,000. He also traded gold with me today. Gold futures, he made $7,000 in that. Basically, when you combine the P&L for the day, which is 58,000, okay, it's got net liquid in positions going on into next week, 56K. You take this number, 56K plus 6, okay, that's basically 60,000, okay, 60,000. And the difference between the P&L for the day of 58,000, this is how you know this student really did start with 2K today. The math doesn't lie. And the next one here, if you're wondering, okay, well, that's the futures. I don't even know how to trade the futures, Leo. All right, show me, tell me, I'm ready. Well, let's say that was your excuse. All right, what excuse do you have now? Everybody knows how to trade SPY. Did you make $65,000 on SPY today? Well, if you didn't, there's probably a few things associated with it. All right, you couldn't stay with the trade. You got in too late. You didn't short the bounce when we sent the alert at 42.60, right? Maybe you saw the drop. Maybe you got in right here. Maybe you just couldn't take it anymore. You just saw the market drop all, you got in too late right here. So maybe you didn't make that. But the opportunity to make that was there if you understand the 13 market moves and the structure. Now, please, all right, don't be this guy. And I'm not trying to pick on this guy, but it's just, there are times and times where people are trying to sign up to trade with 13 market moves coach. And they just don't fucking listen. All right, so listen, I've given this guy the Tesla trade. With 700 bucks, he took the Tesla trade. I tell him, look, it's easily going to be worth, you know, 2-3K. And this is April 28th. So I gave him the trade right here on this day. I told him, look, tomorrow this trade will be easy worth, you know, 2-3K for you. But the truth is, the trade would have been worth for him about 5-6K. All right, but guess what he does? He jumps out right here. The next morning, he sees Tesla actually spike a little bit higher, right? So it was closing nicely lower, and then the next day, what does it do? Tesla actually gaps up. Well, if you pay close attention, right, we short the bounces. You don't let the bounces dictate to you what you're doing. You cannot be a trader if you're going to be reacting to every bounce, okay? Or in other words, every negative situation that is developing against your trade, okay? Because then all you're doing, you're just a puppet on the strings that is doing everything based off what the market is doing. And there's no way you're going to be beating the market like this. So Tesla gaps up. Instead of holding the trade, staying with it, and making about $6,000, I mean, this guy is just like, he's done. Okay, so, but this is what he sends me. He sends me this. He's like, Leo, personally, I see Tesla going back to 950 by Friday and SPY going to 930. Well, Tesla ended up today at 870 and SPY ended up at almost 412. So what I'm saying is this. All right, and then there's like a bunch of goofy messages here. I lost my job. I rebuilt my account. This, that. Guys, none of this shit matters, please. Okay? If you sign up to trade with a 13 Market Moves coach, okay, put all your personal opinions aside. You're here to learn. You're here to learn the system. Okay, so don't be coming up, wasting our coach's time, saying, well, but I think it's going to do this, but I think it's going to do this. Listen, you could be right on a few occasions, and the coach could be wrong. But overall, if you take how many times our coaches could be right in relation to how many times you're going to be right, I promise you there's going to be a huge, huge difference. So I invite you, if you're going to sign up, to stay 100% committed to the trade. Don't be the stock market's bitch, okay? Have the balls to stay with the plan. Have the balls to listen to your coach. Have the balls to stick it at the toughest possible moments. Don't jump out. Don't blink. Fuck the bounces. We short them. So don't sign up and basically make the same decisions that you were making before. Oh, something gaps up. Oh my God, it's going higher. Oh, it's going to go to 950. It's Tesla. Oh my God, it's fucking Elon Musk. Jesus Christ. Oh, it's to the moon. Fuck. No, that's not a way to trade. Okay, so easy $6,000 profit here. The guy just fucked himself. All right, so don't be that guy. I got nothing personal against the guy. After that, I sent him a few messages. I said, look, man, if you can learn from the mistake, you can move forward. But if you can't, and you can't listen, and you can't turn this into educational experience and not repeat the same mistakes again, it's going to be very tough because you trade with emotions. You're going to trade with emotions, you will lose. You will panic. You will get the fuck out of the trade at the worst possible time. And guys, again, I've got a bunch of traders, made a ton of money this week, but there's a few guys that blew up their accounts. I mean, I've got a guy that blew up a 10K account, and, it was a bad entry. It was a bad entry on 2 trades, and the trades were good. They did drop by the end of the week, but the strikes were not. And so sometimes when you sign up, okay, you've got, look, the best time to call our trainers is over the weekend. Get yourself signed up Monday. I mean, if you come in on some, drop on a Monday or Tuesday or Wednesday, sometimes it could be too late, but, these guys are anxious to trade. I try to give them the trade the best at that moment. And sometimes it's not going to work. So just because you're going to sign up with us, okay, it doesn't mean you're going to make money. But I promise you this, it will certainly increase your probability of making money. And when I'm saying money, guys, I'm not talking about making $200-300 on a trade. All right, if you're going to trade with us, okay, we're going to target some high-flying trades that could actually make a difference in your trading account. And that's the only reason to sign up with 13 Market Moves, okay? We're not here to make $200-300. We're here to show you how you can get better as a trader. You can work with a coach. Yes, there's going to be losing trades. When you nail that home run, okay? When you nail that home run, guys, it's all worth it. So we talked about the VIX, and the VIX is doing exactly the 2 green candles. In this case, they're white here. White candles represent the upside here. So basically, we are at that level. We're also at the level that I've pointed out in one of the crash videos on dollar. So I posted this very important video. I called it The Great Divergence. Talked a lot about gold and dollar. And dollar is at that level. I mean, it's almost at that level. I mean, that 104 level that I've discussed, I said this could be a double top. And dollar has a lot of reasons to be dropping right now. Damn, look at these GDP numbers. And the dollar going higher. Like, this is a case of crazy, crazy divergence. The last time we've seen this sort of divergence in the dollar was back in the 1980s. And I don't think that's going to be an exact replica of what happened in the 1980s, where the dollar actually shot up all the way to 156, 160s level. I think this could be it, all right? But Monday is going to be a critical time if you understand how to trade this part right here, if you understand how to combine this information with this stuff right here. I've got a move in store for you that will absolutely blow your mind, okay? And it doesn't necessarily mean that you just simply buy VIX calls. No, that is actually not the trade. It could work, but that's not the trade. I've got a killer trade, and I'm not going to disclose it here. I will only disclose it to the members. So if you're not a member yet, sign up. Just as in the last video, guys, I want to stress that just understanding the market direction is not what gets you paid as a trader. It's all about entry, strike, exit. And again, you're not going to nail entry, strike, and exit every time, but you will in majority of the cases. Out of 10 trades, you will have a few home runs, and it's going to help your account grow. I don't guarantee that you're going to be one of the guys that took their accounts from 2K to 24K this week, or 2K to 58K. What I am saying, if you trade with us, you will have an edge. You will trade with a system. And if you stick to the system 100%, no excuses, losing money on some trades, moving on, okay? But staying with the system long term and not being the market's bitch is what's going to get you paid. Okay, so with that, I invite you to trade earnings with 13 Market Moves Coach next week, guys. You can sign up today. Get the courses at 13mmtv.com. Schedule a call to talk to a senior trader today. There's so much more stuff I want to talk about, guys, but there's just simply not enough time in a day. I hope I shed some light about some psychological aspects in this video. I hope that you will be my next guy that I will take to $1 million plus. That club is growing, guys. Don't miss out the next video. Subscribe to the channel. I'll see you soon. Let's roll.